Hi there, very good morning. Welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. Over the next 1 hour, we'll take you through all that's been happening across the globe and also tell you what's happening on the domestic front alongside all the stocks that you need to keep on your radar today. So let's get started with an eye on the globe and see how Wall Street fared overnight. And US markets did extend their winning streak for a fourth straight session yesterday. These were driven by strength in big-ticket technology names such as Alphabet, Nvidia, Broadcom and Amazon. All of these witnessed the rally yesterday. Meanwhile, the S&P 500 that rose about 0.5% to close at a fresh record high of 6,909, sitting just shy of its intraday all-time high. Now, the nasdaq composite that also gained roughly about 0.6%, while the Dow Jones Industrial Average that added nearly 80 points, or about 0.2%. Now, earlier in the session, markets digested delayed third quarter GDP data from the Commerce Department, which showed that the US economy grew at an annualized pace of 4.3%. That's well above expectations. The stronger than forecast reading briefly pushed investors to scale back hopes of aggressive rate cuts next year. However, Fed funds futures, they continue to price in 2 interest rate cuts by the end of 2026. Now, looking ahead, the street is watching closely for a potential Santa Claus rally, the seasonal year-end bounce that typically spans the final 5 trading days of the year and the first 2 sessions of the new year. Apart from that, on the economic calendar, attention now turns to weekly jobless claims data that is due later today. Meanwhile, trading volumes may thin out a little bit, with the New York Stock Exchange closing early at 1 p.m. Eastern Time on Christmas Eve and remaining shut on Thursday for Christmas Day. So yes, good day of trade coming in, Srishti, for the US markets.
All right, so decent handover when it comes to the US markets, but overall when it comes to the crude oil prices, there we are seeing a bit of stability kicking in, because as of now, crude and Brent crude specifically is trading absolutely flat around that $62 per barrel mark, and no weakness from this higher level is what we are getting to see. But along with that, there has been a fantastic move when it comes to the gold and silver prices. There's no stopping, because silver in today's market and as of now is still higher by around 1.5% and trading at its record high level of $72 per ounce mark. While for gold, we have seen gold surpassing that $4,500 per ounce mark just yesterday and is now well above that particular mark. So bullion market has also seen massive gains this particular year as well, because if you remember, silver has rallied almost 150% in this particular year itself, and gold for so many months now we have been seeing that commodity shining quite very bright. Let me take it across to my colleague Shesha with a roundup of how these precious metals have flared up in this particular year and what were the factors behind it.
Well, yes, precious metals have yet again scaled another record high in the global market. In fact, spot gold has now crossed that $4,350 per ounce mark in the global market. Silver now nearing that $70 per ounce. That one, remember, has seen an uptick of nearly 3.5% in trade today. Now, the two main reasons, one, of course, is escalating geopolitical tensions, and the second is expectations of Federal Reserve rate cut, which is likely to continue in calendar year 2026. Now, remember, as far as the gold and silver performance is concerned, this is likely to be the best performance since 1979. So, best performance in the last 4 decades. That's the kind of performance that we've seen in the precious metals market. In fact, let's also put some spotlight and some light on the kind of performance that we've seen on a yearly basis. So, on a year-to-date basis, gold is now up a solid 69%, with silver surging about 135% on a year-to-date basis. Central banks continue to buy in the global market, so that is one of the reasons. Apart from that, escalating geopolitical tensions, surge in precious and safe haven demand also continue to aid demand for precious metals. But yes, another milestone coming in for both gold and silver, with both of them scaling a fresh record high in trade.
All right, so that's all about the precious metal space shining bright. But let's move on and get you the top global stories that we're tracking this morning. And let's start with the US economy, which has grown 4.3% on an annualized basis in the third quarter. Now, these figures are much stronger than analysts were expecting. Now, economists were in fact estimating GDP growth of around 3.2%. Now, note that these are the first estimate figures released by the government. The robust GDP print comes in amid fears of a weakening labour market. Now, remember that earlier the November jobs data showed unemployment was rising to its highest levels in over 4 years. My colleague Ishika is here to take us through all of the details.
Right, so there's some good news from the US economy in the third quarter. Now, the growth has come in stronger than expected. GDP expanded at an annualized rate of 4.3%, beating the economist forecasts of about 3.3%, showing solid momentum and overall output, right? And looking at the year-over-year picture, GDP was up 2.3%, indicating that the economy is steadily larger than a year ago, and consumer activity was a key driver here. Personal consumption rose at an annualized rate of 3.5%, reinforcing that Americans continue spending. Now, on the income side, the gross domestic income grew 2.4% annualized, reflecting broad measures of earnings and production rising alongside output. Now, inflation remains in focus going ahead. The Fed's preferred inflation gauge, the core PCE, rose 2.9% annualized, right in line with the expectations, suggesting that inflation pressures are moderating but are still above the central bank's 2% target. So, in short, strong growth and solid consumer spending this quarter. Back to you.
All right, thank you so much, Ishika, for getting us all those details. But keeping with the US, Fed Chair candidate Kevin Hassett has said that the Federal Reserve is not cutting interest rates quickly enough, even though the US economy grew at a much faster than expected pace in the third quarter. He also said that the artificial intelligence boom is boosting the economic growth while simultaneously putting pressure on inflation as well. And in the latest on tariffs, the Trump administration has said that it would slap tariffs on Chinese semiconductor imports starting in June 2027 at a rate to be announced at least a month in advance. And the announcements comes following a year-long investigation into China's chip imports into the United States.
All right, moving on. Now, anti-Hindu violence and anti-India sentiment has been on. Now, for over a year, India-Bangladesh ties have been severely strained, and just when one thought that it couldn't get worse, the relations have nosedived even further. Now, Bangladesh is blaming India for the political killings, street violence and unrest in the country. And in the latest, the Ministry of Foreign Affairs of Bangladesh has summoned the Indian High Commissioner in Dhaka, Pranay Verma, and also lodged a strong protest after hundreds of supporters of Vishwa Hindu Parishad and Bajrang Dal gathered near the Bangladesh High Commission in Chanakyapuri and demanded safety for the minority Hindu community in Bangladesh. Moving on, we also actually caught up with several foreign experts on what this means for India-Bangladesh ties. Let's listen into some of their views.
Without doubt, I think the present is the lowest in India-Bangladesh relations ever since the founding of Bangladesh. That is one. Secondly, there seems absolutely to have been a transformation in Bangladesh over the years. And it's not something which is coming up over the last 1 year. Over a period of time, an anti-India sentiment has been growing in Bangladesh. Also, an anti-Hindu sentiment has been growing. If you were to look at numbers, in 71, I think there were around 14% Hindus in Bangladesh. When Sheikh Hasina came to power, it was around 9%. When Sheikh Hasina was toppled, it was around 7.5 or 8%. So there has been a decline. Of course, it's partly due to migration of Hindus. It's partially due to that more population of, growth of the Muslim elements. Whatsoever it be, if you were to look at the declining trend, there has been over a period of time in Bangladesh. That's one.
I think Mohammed Yunus is just not in control. He has always been a kind of a front face, a mouthpiece for the Jamaat-e-Islami. It is the Jamaat-e-Islami, the Islamist party that has been in control since the regime change operation in July, August last year. We know that Mohammed Yunus himself has accepted that this was a regime, was not a spontaneous student uprising. He said it was meticulously designed, and he introduced a mastermind, Mahfouz Alam, who was his own special assistant and a member of Hizb ut-Tahrir. So I think that it is very clear that the regime change operation is focused on bringing the Jamaat-e-Islami to power, since de facto they have been in power since last July, August, but they have not been able to control the situation. All that has happened is mobocracy. The mobs come out on the streets, they surround somebody, whether it's a judge or a professor, they force that person to resign.
All right, but with this, viewers, it's now time to slip into a very short break in this edition of Market Cafe. Don't go anywhere. We'll be right back on the other side.
Take a look at how the Asia Pacific markets have opened up, and it's a rather good day coming in for the Asia Pacific markets, tracking those positive cues from Wall Street, except for Australia's ASX 200, which is trading about 0.5% lower right now. All other Asian indices are trading in the green. China's Shanghai trading above that 3,920 level, absolutely flat, but yes, managing to hold on to that green territory. Hong Kong's Hang Seng also trading, holding on to that 25,800, up just about 0.1%. Meanwhile, Japan's Nikkei, that's doing better, up about 0.3%. 50,578 is where the index is trading. If we talk about South Korea's Kospi index, that's actually trading about 0.3% higher, above that 4,100 mark today. So yes, a good day of trade coming in for the Asia Pacific markets. Now, if you look at the Nifty, we did end, it was a very range-bound session yesterday. 26,177 is where we ended, scaling slightly back from the day's highest point. But yes, we did end in the positive territory above that 26,150 mark. And today also we are expecting a mildly positive start, up about 27 points on the D Street as we begin trade. That's what the Nifty implied is suggesting. So yes, Srishti, good day for the D Street is what we are penciling in for now, tracking all of the Asian as well as Wall Street positive cues.
Oh, well, right. Absolutely. Let's watch out for that. But along with that, let's give you a wrap of how the markets flared up in yesterday's trading session. And it was indeed a good day for the markets overall, because Nifty managed to scale above. Just yesterday it was seen to be gaining for the third straight day. And along with that, when it comes to the banking index, that ended slightly in the red, but it was very, very range bound throughout the trading session. It was the Smiths that were seen to be gaining for the fourth straight session. And do remember that some of these metal counters continue to do well in the stock market, and along with that, the energy, FMCG basket, and even autos were seen to be making a very smart comeback. IT was seen to be snapping its four-session gaining streak. They were seen to be taking a bit of a backseat. Coforge was one of the biggest drag. Other than that, we have seen some bit of a retracement when it comes to Infosys as well. So IT Pack wasn't performing that very well, but Nifty PSU Bank was also seen to be a bit under pressure. Pharma, Realty were some of the other counters that were not doing that well. But the key to note was the move that we have seen in some of these PSU counters, specifically from the likes of Coal India, that was higher by almost 4%, and even stocks like PFC, RAC, some of these railway counters and fertilizer counters were boding very well. So the broader markets was holding very smartly. Let's watch out for more action in today's trading session.
Absolutely. So we'll be watching out for more action in today's trading session. But which are the stocks that are likely going to be on the move? Ravinder is here with just that list. Ravinder, good morning. Which are the stocks that you're tracking?
Whereas industry can be in focus, where company's promoter Sumit Tools Private Limited has sold 5.83 crore of shares at 153.5 per share, and SBI Mutual Fund has bought 5.12 crore shares, and BlackRock Global Investment Series has bought 70 lakh shares at 153.7. So back of this block deal, Belras Industry can be in focus. Another stock can be in focus is Coal India, where company's board has gives in principle approve of listing of ARM Southeastern Coalfields, and board has also given in principle approval of the listing of ARM of Mahanandi Coalfields. And Adani Ports can be in focus on the back of their acquisition, on the back of their Australia acquisition, where company has completed the acquisition of the NQXT Australia. As a part of this deal, the company has issued 14.38 crore new equity shares on a preferential basis to the seller, and Carmichael Rail and Port Singapore Holdings Private Limited. Federal Bank can be in focus, where CCI has approved Blackstone proposal to acquire approximately 10% stake in the Federal Bank. And lastly, Ajanta Pharma can be in focus, where a company has signed in licensing agreement with Biocon for the marketing semaglutide in 26 countries. And under this agreement, Biocon will supply semaglutide to Ajanta for exclusive marketing in 23 countries and exclusive marketing in 3 countries across Africa, the Middle East and the Central Asia. So back of this, Ajanta Pharma can be in focus.
Thank you, Rabinder, for that entire list of the stocks that are going to be in focus. But that's not all. Lots of other stocks as well, which are going to be in focus. And let's start by talking about IIFL Capital. Now, this one is the one that we'll be watching out for because IRDAI has given it approval to operate as a corporate agent, which will now enable IIFL Capital to be in charge of distribution of life as well as non-life insurance products. So yes, a very positive news flow here, and we'll watch out for how the stock reacts. Next up, GPT Infra, yet again in focus. Another big order win coming in for the company, nearly 200 crore rupees. It's for a railway bridge construction contract. Now, this has come from the Northeastern Railway and is to be executed over a period of 730 days. So yes, a big order win here for GPT Infra, and we'll watch out for the stock. Vikran Engineering, that is also going to be in focus. This one because of a large EPC contract that's worth more than 2,000 crore rupees. It's for a 600 megawatt AC solar power project across Maharashtra. Now remember, this is just after another project that Vikran Engineering had received earlier in November. It was a 1,600 crore rupees project, and that has been cancelled. And now this is a fresh new order win that has come. It's a separate one, but yes, those are the two news flows that we are tracking as far as Vikran Engineering is concerned, and we'll wait for how the stock reacts. Next up, HCC is going to be in focus yet again. It has completed the allotment of nearly 80 crore shares at a price of 12.5 rupees per share. That's under its rights issue. So yes, we'll watch out for that as well. And lastly, we have GAIL, which has signed an MOU with the Chhattisgarh government to develop gas-based fertilizer project. A urea plant is what they are going to make of nearly 12.7 lakh ton near Mumbai, Nagpur, Jharsuguda pipeline. So yes, that's going to be the stock to watch out for. So yes, watching out on all of these counters, which are going to be in focus either on the back of order wins or news flow regarding them.
All right. Let's watch out for some of these stocks in trade today. But along with that, let's also tell you which are the cues that you should be watching out for. And first up is the India monthly Sensex expiry that is due today, and along with that is the US initial jobless claims data. That is something that we will be watching out for. Japan BOJs will release the October 29 and 30th policy minutes meeting. So an action is expected, and more important commentary is something that we will be closely tracking. And in terms of the primary market action, with respect to the Gujarat Kidney IPO, that closes for subscription today, and along with that, the lock-in period for Excelsoft Tech will end in today's trading session. In some of the other events is ISRO LMV3 to launch the next-gen satellite. So that is something that we will be tracking too in today's trading session.
All right, so lots of cues to watch out for as well. But let's move on and tell you what's happening as far as the macro front is concerned. Now, RBI has announced new measures to manage liquidity conditions. Now, RBI is set to inject about 2 lakh crore rupees via open market operations and conduct dollar-rupee buy-sell swap auction of $10 billion. My colleague Ankur Mishra joins in with more details.
Yes, Reserve Bank of India has announced several measures to manage liquidity conditions, and in that, OMO auctions of rupees 2 lakh crore will be conducted. In fact, OMO purchases to be conducted in 4 tranches of rupees 50,000 crore each. The OMO schedules of auctions are to be held at December 29, January 5, January 12, as well as Jan 22. Reserve Bank of India will also conduct a dollar-rupee buy-sell swap, and that will be of 10 billion US dollar. Remember, this was already mentioned in the monetary policy statement which was given by Reserve Bank of India governor, and the auction tenure is set at 3 years. The swap auction is scheduled on January 13, and RBI says detailed instructions for each operation to be issued separately, which will be given by the central bank, but Reserve Bank of India will continue to monitor the liquidity conditions in the financial market conditions. Remember, during the same time last year, there was crunch of liquidity, and this time the Reserve Bank of India is proactively engaging to manage liquidity.
All right, thank you so much, Ankur, for getting us all those details. Now, the Ministry of Statistics and Program Implementation has revealed that the revision of the base year for GDP is necessary. Now, Secretary Saurabh Garg revealed that the change was needed as the structure of the economy has changed in the last decade. Let's go across and listen in.
The need for base revision, as has been mentioned, is that over the past 10 years, the structure of the economy has changed. The type of products that are consumed by people have changed. The digital economy has grown much bigger. So that is one set of reasons we need to make the change. The second set is that the data sources that were available has also changed. We have real-time data available. We have digital data available, for example, e-Vahan data, GST data, PFMS data. So for this, we need to change. And the third is international methodological changes also happen. New classifications come up, new definitions come up. So for a combination of these three reasons, we need to make the base change, and that's what we are doing. Regarding what it will impact on the numbers, it's too early to say. Once we have the numbers, then we will be able to comment on what exactly are the changes in the exact numbers that would happen. But in general, we don't expect much changes from what our previous expectations are.
All right, so that's the word coming from the Ministry of Statistics. But moving on, if you're wondering what India has ordered over quick commerce in 2025, Swiggy has released its Instamart report, giving a detailed analysis of consumers' ordering patterns. Now, while one might think fruits, vegetables, or household essentials could have topped the list, the report by Swiggy has given some surprise outcomes. While a person from Mumbai spent 15.16 lakh rupees to purchase gold over the year, a person from Chennai spent 1 lakh rupees only on condoms throughout the year. Another Mumbai user clearly addicted to Red Bull spent about 16.3 lakh rupees only on Red Bull sugar-free, while Hyderabad user got 3 iPhones worth 4.3 lakh rupees on Swiggy Instamart. Now, the 10th edition of How India's Swiggied report has put the spotlight on what India binged on through the year. And this report revealed that biryanis and burger was clearly the favorites. While 93 million orders of biryani was reported on Swiggy, burgers stood out with 44.2 million, followed by 40.1 million orders of pizzas and 26.2 million dosa orders.
All right, and we also have Sumita in conversation with Madhumita Mohapatra, who's the partner at Deloitte, on her expectations from the budget 2026, from self-reliance to capability building, exports and defense. Let's listen in.
I think the budget should definitely cater to, building on more self-reliance by promoting a lot on the startups and the MSMEs, and definitely working on revising the procurement processes in whichever way. Because if you're talking about indigenization and Atmanirbhar Bharat, we have to encourage and grow the entire landscape and the amazing community of startups to help bolster that kind of self-reliance, which is much needed given that we are just come off Operation Sindoor. Right. And our reliance has to be built internally and not in terms of, having to rely on our, supplies outside of the country.
Right. However, let me also ask you the trends that will dominate in the defense ecosystem, because, with increasing geopolitics, we're also seeing a lot of volatility globally as well, whether it's in the Middle East or it's in Eastern Europe. What are some of the trends that will dominate in the defense space, especially in terms of the business defense space?
I think it's a very interesting time we are in right now, wherein we are slowly moving from capacity building to capability building. So I think reliance, a large growth around exports is something that we are looking at. I think maybe 2013, 2014, our exports were next to very, very minimal. I think we are around 600 odd crores. Now it's jumped almost 30-fold, almost up to around 23,000 crores. So that's the kind of predominance we see, but that still does not put us in the top bracket. There's so much more to explore and go.
All right, so that's the word coming from Madhumita Mohapatra. But moving on, Sumita was also in conversation with Aditya Sudhindranath, who's the Chief Strategy Officer at Deloitte India. He spoke on how Indian government is using technology to strengthen citizen-centric services. Let's take a look.
Thanks. I think, let me take an example of like a small shop owner in a tier 2 city, right? That person is actually not bothered about the policy or the platforms, but they are seeing the change happen in the heartland of India, right? And what is the change is the invisible technology that's been actually adopted by the government across states and central ministries, right? Now, what is the change is making sure that tech is not, tech is accessible across different languages and different platforms for each of the citizens across India, right? For example, payments, you take payments in different languages, right? Access to complaint management, access to grievance services, right? Or even chatbots, right? So people are able to access the technology, and once you access the technology, the adoption is very good because it's in the native languages, right? So I think that's the reason which has really driven technology to be much more faster and scalable in India.
All right, and moving on to another story, and Starbucks global CEO's recent India visit has sparked fresh questions around the brand's strategy, scale and path to profitability in one of its most important growth markets. My colleague Shibani got in touch with the India CEO to know more about the expansion plan of the coffee house and what is driving growth for the coffee house. Let's listen into an excerpt of this conversation.
Continue to be aggressive in terms of opening stores. We have just opened our second Reserve store, which is also a 500 store in India. If you had asked me 12 years back whether we would be 500 stores and in 80 cities today, I would have said not possible. But I think we have done that. And if I look at the last 3-4 years, in 2021 we were around 200 stores. We are sitting in 2025, and that was what, 9 years it took us to open 200 stores. Today in 2025 we are at 500, so we opened in 4 years 300 stores. Yeah. That tells you in terms of the momentum that
4 years 300 stores.
That's right.
Yeah.
As against 200 stores in 9 years. Yeah. So we have fast tracked. We will continue to open stores depending on, we want to be everywhere. We want to be wherever there are consumers. We need to increase our accessibility.
Sure.
So we will look at formats, we will look at opening more stores. But we are also clear that we need to be profitable. We need to ensure that we have enough footfalls and that the store makes business sense.
So we are actually in the last month of 2025. Going forward in 2026, how many stores do you intend to open per month?
I also don't know, is the short answer to that. But as I said, yeah. our store opening is dependent on, I think, 3 things.
Yeah.
It depends in terms of availability of, first is in terms of whether that area requires a store so that we can provide a Starbucks experience to the consumers. Are there enough of them? And that is important because we are still growing in terms of coffee. Yeah. Coffee penetration is 24-25%. We are a tea drinking nation. We are converting people to coffee. So you need to keep pace with the growth in the category.
Yeah.
Right? It is not like other categories where the category exists and people are today at some other brand or it is unorganized and I'm trying to convert it. Yeah. That's not my case, right? I need to create demand. So I need to first figure A, whether there are those consumers in a place, and B, whether I can create the demand.
Yeah.
2, which is very important in the Indian context, is whether I can get the right kind of real estate. And I think I've said this many times now, it is not an easy thing. Many a times we are compared with other markets and saying as to how can you accelerate. But in many of those markets, the infrastructure exists. Be it in terms of malls, be it in terms of availability of space. In India, it is not there, right? We see the number of malls. If I see the number of new malls that have come up or are coming up, they're very limited.
All right, so that's about Starbucks' big expansion plans. But moving on to some more news updates. Now, ISRO is scheduled to launch the LV-M3 M6 Bluebird Block 2 mission today. Now, this launch will take place from the Satish Dhawan Space Center in Sriharikota. This mission marks the 6th operational flight of India's heaviest rocket, the LV-M3, and represents a significant milestone in international space commerce.
Back to Market Cafe right here on ET Now, and Jim O'Neill says that India's long-term ambition hinges on sustaining near 8% growth over the next 2 decades. He points to India's strong demographics as a major advantage, but says that the next phase depends on better labor participation, stronger manufacturing, higher farm productivity, and improved basic education. Let's go across and listen in.
I read some interesting longer-term reflections on what the Indian leadership wants to do by the time of the 100th year anniversary of India's full independence, and effectively to become a middle-income country. And if you translate into the kind of economic growth that's needed, that requires India to grow by 8% the next 2 decades. And its demographics are so powerful still. In theory, that should be relatively easy for India. And of course, that is what China did for 30 years until about 5 years ago. And in order to unleash that, India has to be more successful on about 3 or 4 areas, I would say. One is somehow allowing or encouraging India's labor force participation to be more structured, and therefore to be a bigger and more sustained player in aspects of the modern, sophisticated manufacturing chain that links the world. Secondly, and as part of that, India has to still make a lot of progress on the challenges of having a vastly improved productivity sector in agriculture, which of course is such a dominant part of Indian society still. And then thirdly, linked again to both, it has to somehow manage to improve the basic primary and secondary education for so many Indian people that get left behind. The mood amongst international investors has changed a bit for the first time in many years, particularly on a, let's call it a tactical basis, China versus India. This time a year ago, you know, the mood about China was so bad that investors outside of China were thinking, we're never going to invest in China again. And of course, people thought India was the greatest place to ever invest and it's always going to do great. And what's happened is, of course, China has come up with some interesting initiatives, including some amazing innovations in AI, which has led to a completely different mindset from investors. So a lot of people are putting more money into China than they would have dreamt of a year ago, and therefore less elsewhere. And I think India's dilemma in that sense is the growth story is very well known. There is no real, as of yet, linking to what we talked about reforms, new theme to attract marginal excitement about India. And so the attention has gone away. But I think that's quite healthy. Again, I remember debating it when I was on a visit to Delhi about this time a year ago. I was a bit bothered and skeptical about this sort of very, I'd call it lazy view internationally that the Indian market was just going to carry on rising absolutely and relatively forever. And of course, that hasn't been the case because it's not realistic. But I think it's not a bad thing that there's been a calming down of some international flows. And it certainly means that if some of the reforms we touched on start to happen and people believe that India can not only just grow close to 8% as it's doing at the moment for a year, but it can actually do it for 20 years, then investors will be back in a vengeance and be once again very excited about putting money into India.
All right, then that's the word coming from Jim O'Neill. But moving on and speaking of global experts, Geeta Gopinath says that India is outperforming global growth expectations despite tariff wars and geopolitical stress. That's adding the IMF could revise India's growth forecast closer to 7% as domestic momentum that remains strong. Let's take a look.
So if you look at the IMF's projection for growth for India in 2024, that was last year, this was October 2024, they were projecting what growth was going to be in 2025 for India. This is before the elections in the US and everything. The growth was projected to be 6.5% for India this year. This October, the IMF revised up India's growth for 2025 to 6.6%. But that came in before the second quarter growth numbers came out. So I expect they will move up to 7% the next time they come up with their numbers. So India is actually doing better than was predicted before the crisis. The price of oil is now, I mean, I looked at just very recently, it went below $60 a barrel. At that price, well, in a sense, it's not a big trade-off between the economic security and the national security aspect. So there's going to be a lot of cheap enough oil in the market. I think India can decide where it wants to buy its oil from. But, you know, there was a time a few years ago when Russia invaded Ukraine and oil prices shot up dramatically. And at that time, actually, the US encouraged India to continue buying oil from Russia because they didn't want the whole world to be moving away from Russia because that would raise prices everywhere. Right? So tariff rates have gone up substantially, but still are not at extremely high levels. I do think that, at least from the US perspective, we are past peak tariffs in the US. Tariffs have raised prices in the US. They've pushed up inflation by about 0.7 percentage points. So that cost of living increase is a problem for affordability. So that also dampens, I think, the incentive to raise tariffs further. The US is a very important partner for India. And therefore, I think it is very important that both countries, both India and the US, work together to come up with a mutually agreeable solution for where they are. India is also going about and building other trade partnerships. I mean, they have the new agreement with the UK, but also working with the European Union. I think this is something that India can continue to push on.
All right, now with this, let's move on and let's talk about some of the counters that you should be watching out for in today's trading session. And firstly, let's talk about Adani Ports. The company has come out with an announcement where they have said that they have completed the acquisition of NQXT Australia. That's a coal and bulk export port, and the company has issued new preferential shares as a part of the deal. Wherein in this particular deal, what we get to see is that Adani Ports will issue around 14.4 crores of new equity shares to the seller, and the value of the shares issued is at around 2 rupees per share of the fair value, and the value of the shares issued now stands at 21,486 odd crores. Now, with respect to the impact that we get to see on Adani Ports is definitely the total shares of the outstanding will increase, leading to a bit of an equity dilution, and the seller will become a shareholder of Adani Ports. But with respect to the significance of this particular deal, the addition of the Australia to the port portfolio will include Israel, Colombo, as well as Tanzania. It will definitely improve their reach in some of these newer geographies, especially the east-west trade corridor, and moves Adani Ports closer to the target of 1 billion tons of the cargo by 2030. With respect to the guidance change due to this acquisition, our EBITDA guidance now stands at 22,350 to 23,350 crores versus the earlier guidance of 21,000 and 22,000 crores. And the cargo volume, the guidance has been increased higher to 545 to 555 million metric tons. So let's watch out for Adani Ports in today's trading session. Along with that, with respect to Hero MotoCorp, this counter will be in focus as well, as Motilal Oswal has come out with a note where they have interacted with the management and they have come out with the key highlights of the same, where they say that the company has maintained their volume growth guidance of 8 to 10% for the second half with respect to the overall industry growth guidance. And along with that, the company is also targeting to recover their lost market share in 125cc segment post some of their recent launches, which have been doing well in the market. Their EV share as of now with respect to the overall market share currently stands at 12%. The target is to take it higher to 14 to 15% by March 2026. And exports are also are expected to reach a target of 10% versus 8% right now. Motilal Oswal maintained its buy rating with a target price of 16,782 rupees while projecting a revenue CAGR of 10% over FY26 and 28 with a profit growth of 13% during the same period. So let's watch out for both of these counters in trade.
All right, so another counter that we'll be watching out for is Cholamandalam because it has issued a clarification addressing allegations that were made by Cobra Post against the company, that Murugappa group of companies and its promoters as well. Now, they have denied all the allegations, calling it malicious and baseless. The company has also did around 45%, soared around 45% this year. What led to this up move? Mithali is here to take us through all of that.
Right, so the company has denied all the allegations that Cobra Post has posed on them, calling them malicious and baseless, and also said that they have not revised any business guidance for FY26 or the coming quarters. Also, the company maintains their asset quality, liquidity and operations remain robust with their cash and bank balances as of November 30, 2025 standing at 14,900 crore rupees. Also, the credit ratings continue to be standing at AA+. Now, if you look at the stock performance, the stock has outperformed the Nifty and Nifty financial benchmarks, giving in a performance of 42% of returns year to date. Also, if you look at the growth and the business mix, the growth continues to be driven by a shift towards the non-vehicle finance segment and the loan against property. The AUM there grew 33% year on year. The SME AUM by about 28% year on year, offsetting the muted vehicle finance growth and the home loan disbursements. Also, if you see about the guidance and performance for FY26, management has reiterated their AUM growth guidance standing at 20%, and quarter two we saw that the AUM rose around 17% year on year while the disbursements remained largely flat. Now the guidance on disbursements has been revised based on the quarter two numbers, saying that they are a bit shy on the 10% guidance that they had given for the disbursements. The net interest margins, the number that you see there, has improved to 7.9%, improved from 7.5% with guidance for a further 10 to 15 basis improvement in the second half set by the management. Also, the return on assets, they remain within the guided range of 3% and will continue the same for FY26. Now, what investors should watch for the second half will be the key triggers on the disbursements uptake in the quarter 3 and quarter 4. Also, the growth in the non-vehicle finance segment like LAP, SME, which are running nearly at 30% as of now, which remains the central story to Chola as it is aiming to convert their growth story from the vehicle finance-led model to the non-vehicle finance-led model. On the valuation front, if you see, the stock is trading currently at 5.5 times its book with a 1-year forward PEB of 4.23 times. It's actually standing at a discount of its 5-year average of 5.23 times. So in summary, with the headline risks that were posed by Cobra Post, Cholamandalam actually stands fundamentally, and while the liquidity position also remains intact for the company.
All right, thank you so much, Mithali, for getting us all those details. But with this, viewers, we are completely timed out in this edition of Market Cafe. It's a goodbye from me and Kanishka and the entire team who put this show together. But since it's Christmas week, so here's wishing all of our viewers a very Merry Christmas.